Hello everyone, my name is Orlando and welcome to my channel. And today we're going to be talking about, the Tesla and Apple stock and the crazy pandemonium that's going on right now in the investment world. And I just had to cover it. As of right now, the Tesla has did a split of their stock. And so I think the price is down to, it was at 2,200 and some change. And then when they did the split, now it's at 400 and some change. And so I know this opportunity, everybody is trying to jump into it. And I kind of just want to talk about the split, what's going on in the investing world, kind of what I would stay away from and what I am telling everyone. And I just want to go ahead and kind of give this disclaimer that I am not a financial advisor. So please do not take this information and then try to, say that Orlando told me to do it, so that's what I'm going to do. That is not what I'm trying to do here. I'm just want you to hear my perspective on it. And I'm going to take this and make this as digestible as possible. And let's just jump right into it. So the Tesla stock right now has made a really huge jump, right? The last time I looked at it, it was at 900% ROI, which is insane. So if you would have came in at before it started to rally up, you would have made 9 times your money that you put in, which is extremely rare, and it should not be used as a staple or the norm when you're investing in a stock, right? So I'm getting all these phone calls today and, things have really kind of hit the news presses and the media as far as everybody wants to jump onto Tesla, all the Robinhood investors, and this goes with Apple too, because Apple had a split also, but Apple is in a different category. And I want to kind of talk about that. Let's take care of Tesla right now. So Tesla right now, everybody wants to jump on it because they see these huge gains, these 9 to 10 times worth your money, they want to jump into it. And so this is what I'm telling folks, especially individuals who want to jump into it now, is that the party's over. Let me say this right. The party is over. If you are just now getting into Tesla, then it is too late. It is too late. You should have got in while it was rallying or before it was rallying, not after the stock has split and you are expecting to make money now, right? And why do I say that the party is over? We have seen this happen over and over and over again. The last time this happened was with Bitcoin. Remember when Bitcoin came out and, nobody was interested in it? And then I think it was 2017 came. And the first time I had really saw the rally of Bitcoin was an article came out by CNBC. And it basically said, how much would you have gotten if you invested $1,000 into Bitcoin? And it basically said that you would be a millionaire. And I remember it just exploded with people having this FOMO type of mentality, meaning that they thought that they were going to miss out and everybody just piled on. That's what's happening with Tesla. And another thing that I want to kind of add onto that, let's just do the math, right? Everybody knows the saying that you want to buy low, sell high. Well, just because the stock is at 400 and something dollars, the price is still high because the stock has split. It's lower numbers wise, but the market value is still the same because it's split. So it's really the same price. So the $2,200 that it was at, it's still that same price. It's still $2,200. It's just technically it's not. If you know how splits work, it just split up into equal portions. The market cap of the company rose. So what I'm trying to say is that individuals, if you jump onto this, you are jumping into buying a stock that is already high. It's already high. You're buying high and then you're going to try to sell high. Is that that would be the analogy that you would use there, or the wording that you would use there. you're not buying low and selling high because the price is still the same. You should have got in when it was rallying, when no one was really talking about it. Another thing, I just don't really believe in the valuation that's happening with Tesla right now. We do have to remember, Tesla is a car manufacturer. They do have some IP that is mixed up with their cars and things of that nature. But at the core, they are an automaker, right? They're a car maker, right? So the market value is insane. It really is. Their market value is $454 billion. That's bigger than Walmart, especially by revenue. Walmart brings in consistent revenue to match its valuation, and Tesla is bigger than them. And that's the truth. I can really count on my fingers how many times I've seen a Tesla car, and I'm in Illinois. It's just, to me, it's the market valuation just doesn't make logical sense. And so what does that mean? Well, what that means to me is that there are a bunch of speculators in this. That means that the price has went up high, but then it's gonna drop down. And not just drop down a little bit, but drop down a lot. You have to remember where we are right now. We're in a situation where we're in a recession. People are unemployed. There's a pandemic going on. And we are having one of the best stock rallies. The stock market is just going crazy, and it doesn't make sense. Well, where have we seen that before? We have seen the same exact situation in the dot-com era, the tech era, where everything was kind of just didn't make sense. And we had like 18 months of everything going great when everybody was saying everything was going to go bad. But what happened after that time period? It tanked like a big boulder dropping in the ocean. I mean, it just sunk, right? And that's what's going to happen in this scenario. In this scenario, especially with Tesla, because I think they're overvalued, it's going to sink. Now let's get to Apple. Apple, I also don't believe that you should get into it now. It's split. But the difference between Apple and Tesla is that Apple, I believe, has a great valuation. They have a product that comes out every year that they sell to people constantly. Their cash balance that they have on cash on hand is astronomical. I believe the value for Apple is justified, but I do not believe you should invest in Apple right now also. I think the best bet is to wait until the stock market crashes. And it will happen. This is abnormal for everything to go up and just continue to go up in a time like this when, like I just said, unemployment, recession, everything is happening. This is not a time to purchase. Now, I understand there's some day traders out there that are kind of just riding the highs and selling, but I'm really speaking to individuals like myself who would be long-term holders. I understand that you want to go ahead and you're thinking to yourself, well, Orlando, if I buy now, then, even if it does drop, I won't, 20 years from now, it'll be up higher. And I kind of agree with you on that, right? I understand that. But if you know that you're buying something high right now, and within a year or so, or within 6 months, or you figure within 6 to 1 year, that the price of that will drop, you will be able to buy more of that, buy more shares of it at a cheaper price. And then when it shoots up, you can almost, the return that you're going to get on it will be greater. And that's my suggestion. My suggestion is to wait until the market drops, which it will. And then when it drops, then for you to go ahead and purchase Tesla, Apple, Google, Amazon. But right now, everything that is going on is being pushed by speculators, Robinhood investors, Webull investors. Investing in stock has never been easier. And that's what we're seeing here. And why? And let me just get to the second portion of this video of why the stock market is doing so well in this scenario. And that is because of the Fed. The Fed is holding up this market like no other. The Fed, it has more securities More Securities now is the biggest investor in the United States. It's the biggest investor in securities in the United States. They are holding up this market like no other. And not to get too nerdy on economics here, but we have a scenario where the Fed is ignoring, they're saying when we get to 2% inflation that, hey, we'll still be okay. But what happens when we get past 2% inflation? When we get past 2% inflation, the Fed only has two tools that they can use: printing more money to control inflation, or raising interest rate, controlling interest rates. And so what is the Fed doing right now? They're pumping money in, printing money constantly, and then on the other side, they're keeping rates low. But when inflation gets past 2%, they're going to have to do something. And what are they going to do? They are going to raise interest rates from the 0% that they are now to raise them higher than 0, right? What happens then? All this cheap money that's out there, all these companies that are leveraged with so much debt to the eyeballs that cannot even take a 1% increase to the debt that they have that's owed. Bankruptcy, bankruptcy, bankruptcy. That's what you're going to see. And right now, we're living in a fantasy land world, and it's not the true market because the Fed is holding it up. It is literally saving this stock market. It really is. And when the Fed cannot control or hold the market and contain it and allow it to grow while they're pumping in all this money, and they end up raising rates, when they have to do that, get ready for the fall. All the stocks that you have invested in, all the Apple, Tesla that people are buying high, especially if you're going to hold on to it, it's going to drop. It's going to drop and drop. And people are going to be saying, wow, I put all my money into this. I have people calling me today telling me they're taking their retirement out and investing it into Tesla and Apple stock. To me, that's foolish. It takes you a certain amount of time to build up your retirement, and you see these two stocks in particularly. It can be a number stock because the stock market is going up. So it just doesn't have to be these two. These are just the most popular ones. But you see that these stocks are going up, and you say, you know what? I want a piece of that. So I'm going to go ahead and rip out my 401k and then drop it into this Tesla and Apple stocks. And I'm sorry to tell you, but you're making a mistake on that. If you're going to do that, you should go ahead and wait. And like I said, just wait till the stock market crashes, because it will. It will. Just mark my word, it will. We have seen this cycle happen over and over again. So it's a foolish thing to go ahead and pull your retirement account out, drop it all, and risk it all on black or red. It's better, once again, for a retirement account, especially if you're closer to retirement, not to be so risky. But even if you're not, if you want to be able to take advantage of a scenario when you should be buying, you should wait until the time where everybody's selling. When everybody's selling, that's when you need to buy. Look at Warren Buffett. I was talking to some of my friends today, and I was telling them, like, look at Warren Buffett. He is a legendary investor, and he is selling everything. Airlines, this. He is so defensive right now with his investments. He is getting ready for something. But the question you should be asking yourself is, what is Warren Buffett getting ready for? I know a lot of people are like, oh man, Warren Buffett's old. He doesn't really know what he's talking about. I'm telling you guys, if you're going to look at someone and say, what is this person doing? You need to sit there and follow. And it hasn't really been in the media that much. Everybody's just been noticing that he's been selling. He is getting extremely defensive with his investing. He's taking money out, selling his positions, putting money into things that people need, like utilities and things of that nature, things that we will need regardless. He is not dropping money into Zoom or Facebook or whatever it may be. He's dropping money into utilities and things that are just very defensive type of investing. And why is he selling things? Does he see something coming? I mean, I don't know. I'll leave that up to you to figure out. And a lot of times, a lot of people don't see, they see what the news puts out, but they don't really see what the smart money is doing. And the smart money has already probably pulled out of some of these positions and has collected the upside to their investment. So once again, I didn't mean to go on that tangent, but I think it's very important to take a look at it from that aspect of thing, guys, and just realize that do not, and I'm speaking from a person who is not, I'm not a stock guy. I will let you guys know that up front. I am not a stock guy. But what I can tell you, though, is that I would not go ahead and just pull money out of my retirement account, plop it into Tesla and Apple. I would not. I would wait until we kind of see where things kind of land, and wait till the stock market drops. You're going to be buying high if you go ahead and buy now. You're too late to the party. Everybody knows about it. Everybody and their mom is jumping on to buy this stock, and someone's going to catch a falling knife. And the question is, do you want to be the person who catches that falling knife? So once again, guys, please hit that subscribe button, and also hit that notification button and that like button, so that when I release videos like this, that you will be notified. And I'll see you guys in the next one. Thanks.